folks, I'm LA Little and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what might it tell us about the coming days. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the cool Rocky Mountain air, folks. What a day. I tell you, last night, sometimes, I wouldn't say sometimes, I think most of you would agree that most of the time, the market gives us a pretty good read about what's happening, and it's not always clear, but when it is clear, usually it kind of does what it's supposed to. And last night, it certainly looked to me like we were going to try to go after the highs, and that wasn't the case. It wasn't even close to the case. It was a sell-off all day today, and that read just turned out to be totally wrong. So it is what it is. We didn't catch it right, and now when I see, let me back up for just a second. Every time we're looking at the market and we're saying, okay, this is what should happen, right? Or this is what's going to happen. I should never say this is what will happen, because we don't know for sure. We have a pretty good read most of the time, but not, it's not 100% any time. But when you say or you think the market is telling you X and it does Y, either the market's confused or you're confused, right? Either there's something you don't see, or just plain the market doesn't know what it wants to do, right? Because the market really is the collective conscience of all those that are trading it. And that conscience can be mixed up. I mean, it doesn't have to be a clear signal all the time. It can be, a clear, what appears to be a clear signal one day, and it flips around, does exactly the opposite, and then flips around, does it again the other way. So my point is that when we get something where we're a reasonable read, and I thought last night was a reasonable read, and it turns out not to be the case, then you have to back up and say, wait, okay, so what's going on here, right? Because it's not doing what you think it should do. And if the market doesn't do what you think it should do given the signals that it's giving you, either you're not reading it right, or it really doesn't know what it's going to do yet. And in that case, you're just going to have hands off. And so we're at that point now where I think we had a good read. It didn't do what it was supposed to. We'll see what it does tomorrow and whether tonight's read actually works or not. And so we'll read the technicals here together. Let's look at the ending numbers to start with. I don't usually get it that wrong, and so I think it's important that we realize we're trying to, create a thesis of what we believe is going to happen, and then it's up to us to measure what actually takes place and use that information in kind of a feedback loop to make better decisions. That's what you're always doing, because the market is always testing. That's its job. That's what it does. Okay, S&Ps are actually, let's start with the Dow, down 129, 0.75%. 16,401. The S&Ps dropped 17 almost a percent. 1867 3/4. Composite 57 1/4 lower. 1.38% lower. 40.8081. NDX 48 lower. 1.34% down. That's 35.56 and a half. The Russell 20 points lower. 1 3/4% loss today. And again, I don't know about you, but as someone who's looking at this market, I don't like to see this over and over and over, and yet we keep seeing it. That is, the Russell leads us on the way down, right? The Russell is the only of these 5 that we're looking at. It's the only one that isn't affected greatly by the weighting. And so the Russell is a better read of the non-weighted situation that's going on. Now, mind you, it's also small caps, so it's both. And right now, the Russell keeps screaming that there's something wrong here. It still hasn't even lifted out of that hammer reversal bar. That's how bad it is. We had, let's see here, what else did we have? Everything else was pretty flat, except for the dollar. Dollar got crushed, down 0.5%. And we'll have to take a look at the dollar because the dollar just blew out the lows. And that, you would think, would push gold higher, yet gold couldn't move. There was no volume on gold today. And the bonds flipped around again. I don't know, maybe it's fear trade one more time because, you know, the bonds tend to move inverse, but you didn't get a big bump out of the bonds compared to the losses that we saw. So that's the way it looked. Let's go to the charts, take a look at these guys, and let's start with our S&Ps. You know, folks, we've had a range. You know, I'm getting tired of drawing this, but we've had this range for a long time. We keep coming up, testing, trying to break out. Last night's setup was a good setup in that you went into this 28th bar. You had lighter volume, much lighter volume down here, right, as you went into it. You flip around, you do a hammer. That should go higher. Did not. And that's what I was talking about as we came on the show. Now, the hammer isn't dead yet, but it's about as close to dead as you can get. Because really, to kill the hammer off, you have to get back underneath that low. The low yesterday was 1866.77. We got down to 1867.72. So missed it by a buck. So if we get any weakness in the morning, we're going to blow out that little hammer reversal from yesterday and pretty much kill it off. What this is to me, and what I've talked about before, is this to me is a reversal. Right? And not a reversal. I call them takeaway bars, for lack of a better name. You know, you take away all the goodness, in this case, of the bar prior. You know, that's a takeaway bar. You saw one here. Here was a takeaway bar. You go and take away everything that happened the day before, and then that usually, you know, ends up leading you farther in the direction that you take away. So in this case, it's a takeaway bar. You would think it would lead farther in a direction. That is the read tonight. Honestly, I do not know if it will do it or not, given what happened last night. We've got basically three ranges inside the big range. There's one here, here, and here, right? If we put them all in, we are back into the bottom, the top of the middle floor now. And so when I look at it this way, it's like, okay, that doesn't look good either. So everything, any way I look at this, doesn't look good. It was a bad day. So that's the S&Ps. So if we take a look at the NASDAQ, and let's go to the NDX first, since the NDX was the one that was able to actually get up and lift out of that breakdown bar. Remember, S&Ps, Dow, they've been the strongest. The weakest ones, NDX, IXIC, and the Russell. Well, yesterday was and I harped on it a little bit, was a great signal. Didn't have any volume, we knew that, right? But it was a signal that it was coming out. It actually was the first time we got a close over this breakdown bar. And what happens today? Takeaway bar, back the other way, give it all up. That's about as bad as it can get. And that was off of a change in trend as well because of that move higher, right? It closed over this bar, the swing point high. It gives you a trend transition back the other way. Now, when you come back on a trend transition and you start immediately doing the retest, and that's what this is doing, then you have to look at where that retest could take you. Well, that's a big bar. It can take you all the way to the bottom of the bar. You know, you can definitely get to the bottom side of that swing point on the retest, which means NDX can come almost back to the lows again. I don't know that it's going there, but again, negative situation here, very negative situation off of yesterday's goodness. Let's do the IXIC. So the broader NASDAQ, remember yesterday it couldn't get up there. It doesn't do it. It's back inside the 28th bar. Again, negatives. These are all negatives. And then we go to the Russell. The Russell, the Russell hasn't been able to even get outside this 28th bar. Everything else is trying to, everything's over it. It's trying to stay out of it except for the Russell. Russell couldn't get out of it. Today, what does it do? It comes back. It's still inside of it, but it's so deep now. Now you got to think it's going to try to test the bottom. And folks, you know, how many times can you come down here without blowing this out? And what I mean by this is I'm not talking about just this time frame, right? It's going to have to take that out. That's going to be hard. The volume, we don't look like we have the volume yet, but you have gotten 5 days sideways, so that you certainly could get the blowout. What I'm talking about is the larger picture, which, you know, we've talked about before, is that if you start taking out these lows, you're taking them out on multiple time frames. That usually is not a good thing. That usually leads to a faster move to the downside. And if you look at it, you got 3 of them all lined up right in the same area. You know, a trade back underneath these, not only do you have an ABCD structure to the downside, right, you're blowing them out on multiple time frames and multiple swing points, all of which is bad, right? And so if this does start to crash down and start to take these guys out, this could be the impetus to get that larger sell-off, which so far the market has been able to avoid. And we're not far away. Let's go back to the daily here. I mean, we're only talking, you know, a couple percent. We're not even, I don't even know if it's 2%. That low is 1095. We're sitting at 1108. We're talking about 10 points. We're talking about 1%. So 1%, which we did today, right? We did 1 3/4 today. If we have another day tomorrow like we did today, we're going to blow them out. And if you blow them out on the weekly, bad news, right? It's going to be the worst of what has been avoided so far. And I don't know that it will be like the S&P when it blew them out on the same time frame, and that it just, you know, because remember, that's 2 to 3 bars extension on the longest time frame. That's the weekly, and that could be a bigger move. So that's the danger. That's what we're up against. We'll see if we start breaking this down. The key hurdle is this low. It's on the 28th, 1102. We're 5 points away. You got 403 there. You're coming back with 332. So right now, it doesn't look like it's got what it needs to break it down, but at the same time, we have gone sideways long enough to where it could break it down. And that's a danger situation. All right, let's go to the sectors. Sector-wise, what do we got there? Let's see. Let me pop over. Oh, while I'm here, let's go to the world markets. So if I go to the FTSE first, and I'm going to Europe. Europe hasn't really felt the brunt of this selling yet, but Europe's starting to struggle as well. So we had talked about previously that the FTSE was going to try to make it to the highs. Well, it's done it. It's finished off its ABCD structure on the way, right? And so that's pretty much done. And so, I mean, it could get up to the highs that actually extends to about that high. So a little bit more potentially, but towards the end here and into resistance. FTSE looks like it's done about what it's going to do. If I go to the other two in Europe, the other two majors, the German DAX, and mind you folks, this is with better data coming out of Europe in terms of economic activity, yet Europe can't make it to new highs. And so here on the DAX, we've just got this big range that's been in effect, right? You got a high up here, you got the middle of it about there, and then you got the lower end of it here. It's coming back to test that lower end, 2, 3, 4, 5, so that's not a swing point yet. If it hangs one more day, which is possible because you got the ECB on Thursday, then you'd have your 6 bars. That would give you a swing point high up here and a swing point low down here. And then a break of that, of course, could give you a larger move. So DAX is setting up for something a little bit larger, probably come Thursday. Let's look at the CACs. The CACs is still failing on the weeklies. We've talked about this on the weeklies. I could pull the weekly chart over real quick. Actually, let's do it here. And so it's failing on the weeklies at the highs. Now a little bit of a pullback so far this week. Going back to the daily, you can see it was a fairly negative day today. Just like us, it takes away most of what was good yesterday with, with more volume. So this still range trading. Looks to me like it is going to try to range trade a little bit lower. Trying to decide where. I'm thinking somewhere in here about 4,400. Not that far away, 20 points. So Europe, Europe's pretty much spent going sideways. ECB is going to shake that up, if anything. If anything's going to shake it up, it's going to be ECB or Ukraine, right? Ukraine's still hot on the maps, escalation in the tensions there. Supposedly elections coming up, in another week and a half, and yet it's almost total chaos at this point from what I can see and read. If I go up just for my neighbors up north in Toronto, let's look at the Toronto Exchange. So they made another big push up. They're coming back lighter volume. This also looks like it's going to hold again on the way back. So, potentially could come in here to do a retest off this bar. It's already started to do that. There was some swing point over here that this is measuring against. That low is 14,569. I would think you probably get that test tomorrow. It doesn't look like you're going to have the volume, so it's probably going to flip it back around. And my friends over in Australia, let's see what's happening for them. And it doesn't look like they're going anywhere. So we can't look at much more in Asia because the big markets were closed in China and Hong Kong and in the Nikkei. They'll open, I believe they open back up tonight, so we'll get some numbers tomorrow on them. Let's go to the sectors right quick. There's not a lot to talk about in the sectors, with the exception of a couple of failures. The XLK, and that's not really a surprise since the XLK is closely tied to the NDX. That also had gotten over the breakdown bar, back underneath it again. Not what you want to see. Takeaway bar from the prior day. And then the other one was the XLV. So the XLV has been trying to get over that breakdown bar, goes up there to test it again, fails again, can't get over it. Again, bad news. And then the last one was the XLE. So the XLE has been one of the major strengths in this market. They got good news again today on some earnings out of EOG and some of the other oil services. Popped up, they were green all day long, but by the end of the day they gave pretty much all of it back and failed on price and volume at the high. So that one also at best is a range trade. So, and then the last one to look at, and this is one that you probably want to monitor tomorrow, is the financials. Financials come off heavy volume, right? They're coming back into an area where they should find support if they're going to, and it's right here. You can see it on the TA Today charts, that green area there. That is the support zone. That is where the buyers should show up if they're going to, right? You got some big volume there. You've got a swing point low, 1, 2, 3, that will print. This will print as a swing point low tomorrow. And so that is a key area. It looks like it is going to come into it and test it tomorrow. If it starts to blow that out, folks, it's going to the bottom, and that's also bad news. At least it will go to the end of this bar. That's where some more volume is. So, because, and the reason I say bad news is because this is the major sector in the S&P 500. S&P 500 is not going to break out without the XLF going with it. And as a matter of fact, if the XLF starts to break down, it's going to break down. I mean, you can't help it. There's just too much weighting in this sector. And it's the same in the Dow. The Dow has about 30% weighting now in this sector. Today, I didn't look to see what was killing it today. I know Buffett had his thing over the weekend. JP Morgan's been having trouble. I saw Bank of America struggling. So JP Morgan continues lower. They said they're going to have 20% lighter earnings. Bank of America continues lower. Probably all of them. Citigroup going back towards the lows. The strongest one in the group is Wells Fargo, and it was back again also today. Banking sector struggling. And broker dealers is a bunch of them. It's not just one. Okay, that's the sectors. Real quick, Ox markets. I see some questions over here, so I'll take a look at those. If you want to email me at support@tatoday.com. I'll try to look at your answer or your questions, or you can text me 303-912-9110. So text, email, or of course type in the box over there, And I'll take a look at it. Okay, Ox markets. I wanted to look at the dollar. So the dollar blows out the bottom with, huge move down. I mean, it didn't have huge volume, but it's a big gap down. Never can recover. You take out multiple swing point lows. That's not a good deal, right? The best you can do now is get back up and retest and attempt not to regenerate lower. The bad is even worse if you start considering the weekly, because now on the weekly you're taking out the lows as well, and actually you can't see it on the weekly. It goes back so far. Let's go to the monthly. These will be breaks on weeklies and monthlies if they start taking them out, and that is that you've got this one down here, right? It's not that far away, and then of course the final one. And folks, if you take those two out, there's really nothing underneath this market in terms of the dollar. So let's see, that's 2107, and that low is 2084. We're closing today at 2116. So you can see we are like right on the cusp of trying to blow them out. Now, mind you, you're coming down there with absolutely nothing, so it should find support at least the first time. The problem is once you get the bounce on the daily, you're going to probably come right back after them again. So once this bounce takes place and it comes back up and does the retest, if it regenerates lower, right, that's when you really have to worry. And they're both lined up about the same. So a move back up immediately could get you back up to the top. If it takes you a while down here and then you come back up, maybe you get to the bottom. Either way, this thing does look like it's going to try to regenerate lower. It just finished off its ABCD structure. Now whatever bounce it gets, we'll set up the next one. That's the dollar. So if I use the dollar and segue over into the gold market, you would think that gold would be up today big on that, but that was not the case. Just like the whole market today, it was a little bit odd all over. Gold comes back in, closes this gap. 125.67 was the high, gets to 125.63. So it closes the gap, holds it, right? Does a little doji there. Looks to me like gold may be setting up the ABCD structure to take it higher that we were talking about. Now, whether it's, if it doesn't pull back anymore, it makes it stronger and it will blow out those highs. If it pulls back deeper, then it will probably just get it to the highs to test them. So we'll see what gold does tomorrow. But right now, gold did one thing bad, one thing good. Comes back, fills the gap, does it on no volume. On a day it probably should have shot higher. Silver kind of looks the same. Silver couldn't go anywhere. It hasn't been able to get over that high yet. It's just hanging there. So no volume though. And if I look at going back to the ideal of the XLE, if I look at the oil market looks like it wants to go farther down, right? It's holding here in a range, 5 bars now. Each time, if you notice, it gaps and holds, right? So it gaps here, holds. Gaps again, holds again. Gaps again, now it's holding there. It looks to me like it's setting up for another gap down. This thing looks like it's going to come into this bar, try to test it. That's the low, that's the high of the high volume bar, which is almost the low, not quite. But that looks to be where the test is going to be at. If that's true, I wonder how much longer the XLE is going to be able to hold up, showing those failures as it is at the highs. Okay, so that's a decent wrap of what's out there. I see a bunch of questions. Let me go over and take those. But before I do that, let me take one that was texted to me today, which was Twitter. So the question here, let me pull up the text. So Twitter unlocked a large portion of their shares today, and people dumped them like crazy, it looks like. So the question is, I'm not sure if April 28th or the 30th is my B point. And he's saying, is it this one or that one? Well, it's that one. So it's the 28th. And the reason it's the 28th is because that was the first place that you got a low and then a higher low, higher high. That's what I look for. And so now it goes down, and the next part of the sentence says, but regardless, it appears the ABCD has completed. Do I agree? Well, yeah, on this time frame it has completed, no doubt, by about 12% too much. So looking to go long, he sold the 31 puts. He wants to go long. Well, I think that you're actually going to see this go farther down. I don't think it's done yet. Now, it may be that today creates the blowout to where you get a little bounce first, and if so, I'd take my money. But you may just simply go down deeper first before it's over, and that's because if you look at the weekly, if we look at the weekly, you got a different ABCD structure, right? And that's why it's important to look across all your time frames. So you got an ABCD structure here, right, that takes you deeper, and that one takes you to about, I had to put it on a spreadsheet because if you just do the math, it's going to take you even farther down than you should expect. And so if you put it in the spreadsheet so that you're really looking at the percentage differences, not the arithmetic difference, that target's 2779, 14.61% farther down. Again, don't know if it goes there straight, if you get a little bounce and then it finally goes there, but that's where it's trying to go. So 27, almost 28 is where it's trying to hit, 27.75. So I don't think it's done yet. And that's where I'm at on that one. When it gets down there, it's probably not a bad place to think about it. I don't know that Twitter is like a Facebook, but you know, Twitter's a big company. Institutions kind of forced to buy it, so it will make another run here at some point. It's just that long term, I don't know if it's a place to be. I don't think it is, but then again, I don't try to think that long term. I just try to watch what it's doing and see how they report and what they report. And so far, all they reported is a disappointment from what I can see. All right, let's go to your questions on the boards. Ellie, will you look at CLMS? Okay, this is one that we talked about just the other day, I think. And so the question was, it really didn't move like we thought it would last night. And the market seems really weak here. Yeah, and what I was talking about, remind me, I think I was talking about it trying to come into this bar and test it, right? It didn't get there, did it? And it had already tested, so yeah, did we look at this on the weekly? I think we did. Let me pop up the weekly and see what it looks like. Because I think there was a bar underneath here, wasn't it? Yeah, it was. So the low was 1176. That high was 1198. So 76 to 98. And that jives with that too. 76 to 98. Let me go back here. Yeah, so it's still looking good. I think we use this as an example, if I remember right, we use this as an example of a bear flag, right? Where you have the flag here, you know, and classical guys would say it's going deeper, but no, I think it's behaving. It's going to push up before you know it, and it's going to come back up and do the retest regen. I just don't know if it's going to get a little deeper. If it does, that's going to be the buy. It's hard to buy it here because you're in the middle. Your risk reward is just not there yet. Next question, LNCO. I'm running out of time. Let me try to hit these real quick. LNCO, $24 ex-dividend Thursday. Will it go up from there? I don't know. I don't think so. If it does, it's probably, you know, it's probably not going to go too far. See the weekly real quick. Yeah, this is a broken stock. I wouldn't get too excited about this. This one looks to go farther down before it's over. So, not too interested there myself. MW is the last one, and on a weekly, it looks pretty good. It's coming into support. Men's Warehouse. You have to check the news on this. I think they're either taking somebody over or getting taken over, so you got to factor that in. And if that's still the case, I'd probably lay off of it and not mess with it. Okay? I'm running out of time here. You know, I honestly do not know what the markets are going to do tomorrow because today totally was off base. If I did a strict technical read, I would think they try to trade deeper, you know, to the downside. But I don't know that you can do that strict read. I think we need to see what they do tomorrow. You also got Yellen speaking in the morning. So at this point, I'm kind of non-committal. We could just as easily get another bounce as we could a takeaway. But it seems to be that it's not. This isn't the place to try to read in what it's going to do. It's just not clear. If I had to do the pure technicals, I'd think a little bit lower, but I think it may surprise us again. I'm going to leave it at that. Thanks for joining me. I appreciate it. Tell a friend, tell two. I'm LA. This is and was your daily TA wrap. Have yourself a great night, and I'll see you next time. Take care, folks. Good night.